All right, time now for a look at some of the day's business news. And joining us in the studio is Anka Ula. Morning to you, Anka. Beginning with some economic data out of China. It's releasing its first data since the trade war with the U.S. Began.
That's right. Well, the National Bureau of Statistics announced the growth figure for the July to September quarter was 6.5%, more than a year earlier. Now, that number is still much higher than other global economies, but lower than the 6.6% which had been predicted, and it's also China's slowest growth figure since 2009. Let's listen to the spokesman from the Office of Statistics.
The Chinese economy is increasingly integrated into the world. It's the second largest in the world. External variables of the world economy are increasing, and there are still many economic and trade uncertainties between the U.S. and China, so economic activity will face some downward pressure. This external environment will add some uncertainty.
Well, for more, we can cross to France 24's Beijing correspondent Charles Pellegrin. Charles, do these slow growth figures mean that U.S. tariffs are taking a toll on China's economy?
Well, Anka, this is the first batch of data, the first economic report since tit-for-tat tariffs were applied on trade between the U.S. and China in July. And I think it appears to be too early to say what effect the trade war has had on the Chinese economy. And actually, looking at this latest report, we can see that Chinese exports are still going strong, growing at a pace of over 11% year on year. So if we want to look at the reasons for this economic slowdown, we should look at domestic reasons. And one of those is the soaring debt levels that the Chinese economy has experienced. And in the last 2 years, the government has been trying to crack down on that debt, which means that there's less money to go around and less investment. Another reason for this is that while retail sales are still high, consumer prices have gone up at rates not seen before or not recently. Consumer prices have reached their highest level in 7 months last month, meaning that Chinese consumers are feeling the pinch. Another reason for concern is the Chinese stock market, which has fallen in value of about 30% since July, which is a sign that confidence in the Chinese economy is hurting.
Well, Charles, what is the government doing to change the tide of the national economy? How are they trying to make things better?
Well, what we've seen so far is that the People's Bank of China has changed course from trying to fight bad debt to encouraging and adding more liquidity on the market. Over the past year, the People's Bank of China has cut the reserve requirement for Chinese banks 4 times, trying to stimulate investment and to prop up growth. Other things that they've done is to ease some environmental regulations when it comes to coal, for instance. And they're also trying to control the message more. Just before this economic report was published this Friday, 3 top Chinese officials released statements urging investors here in China to keep their cool and reminding them that while the stock market isn't doing well, it's not a reflection of the Chinese economy that they'd say is still stable and strong. And they're controlling the message in a much more real sense as well. Last month, the government sent out a directive to journalists telling them to, quote unquote, manage bad economic data. So that's another reason to be skeptical and to have doubts about some of the figures that are shared by the Chinese government.
Well, thanks for that update. That's Charles Pellegrin reporting for us from Beijing. Now let's take a look at how Asian markets have been responding. Chinese stocks rebounded after falling immediately after the report. As Charles mentioned, financial regulators have started defending the economy, trying to boost that investor confidence. As you can see here, the Shanghai Composite up about 1.7%, Hong Kong up about 0.7%. The Shanghai yesterday, we'll remember, had dropped 3% nearly. Tokyo's Nikkei is the only index in the red. It's down about 0.6% a short while ago. Now, China's Vice Premier Liu He said that trade frictions with the U.S. are to blame for the recent slump in Chinese financial markets. Moving on, the French Unemployment Office is trying to shake up the recruitment process. taking a page out of reality TV's book. Pôle emploi is under fire for imitating the popular talent show The Voice, where candidates vie for recruiters' attention. Now, is it a fun way to get a job or a humiliating experience? Shona Bhattacharya takes a look.
It's an image straight out of a televised talent show. A candidate stands as judges turn their backs to her. But this is actually a job interview organized by France's unemployment agency Pôle emploi. Everything is designed to look like the show The Voice. The buzzers recruiters press if they like the candidate. The color scheme. Even the name, This Is the Job. NGOs and unions of the agency say they're scandalized.
What's next? Are we going to organise a circus? Why don't we bring out the lions and whoever's still alive at the end gets the job? Is that the kind of society we want? Is that what we're offering? 15 people want a job, and this is what we offer? It's not right.
Reports suggest these kinds of interviews took place in at least 8 recruitment centres in France these last few months. Candidates were vying for jobs as welders, in slaughterhouses, or in construction. They had been notified of the rules and had agreed to take part. Still, the agency admits it made a misstep.
The use of tools from the world of entertainment is clumsy, but it's the fruit of a well-intentioned initiative to allow job seekers to find employment.
Pôle emploi has tested several kinds of innovative ways to help candidates, like simulated interviews, team sports, and even games, methods that had been hailed as positive initiatives until these blind audition tests that the recruitment agency says are no longer being organized.
That's all for the business update. Now back to you, Will.
All right, thank you, Anke Ulla. She'll be back a little bit later, especially when the European markets open at the top of the hour.